Hey folks, welcome back to Honey Money SG. And I realized that I may be wrong about the recession because there's actually no such defined definition of recession. I mean, the consensus is generally 2 consecutive quarters of negative GDP. But is that really so? I mean, if everything around you is already falling apart, then aren't you already in that recession mood? So maybe a recession is not something that you can really see and touch or measure, but it's more of the general market sentiments surrounding this entire environment today. And all this started with the bad news, which is raising interest rates to curb inflation by the US Federal Reserve. Like I said in my previous video, the impact to companies is actually quite huge because when the interest rates rise, the loans to companies actually becomes more expensive. Companies have to pay a much higher interest expense, and that will actually affect their bottom line, reducing their gross profits that they are used to run the business, which may eventually mean that they have less purchasing power compared to the past, and also they may cut back on their spending and their annual budget, be it spending on employees, spending on marketing expense, spending on other things that will grow the business. And all this is an effort to improve the cash flow, because the less interest expense that you pay out, the more cash that you can have in your balance. So in order to improve cash flow and to maintain a very healthy cash balance, what companies may do is firstly an hiring freeze, which means if there are any open positions, they will stop doing that because they will use the existing manpower to try to cover up for the existing duties. For companies which are not too fortunate, then they may announce massive layoffs, which means retrenchment. They're going to remove people from their jobs, less people working in the company but taking the same amount of workload. Or maybe they may consider corporate restructuring, whereby they ex the entire country department in a high cost of living city such as Singapore, and then they move the operations to Malaysia, to Philippines, to India, all these lower cost of living countries, just to really save some costs. Now this is evidently seen in some of our local companies like Stashaway, Shopee and Crypto.com, right? All these Singapore headquartered companies announcing massive layoffs of their staff because they cannot keep up the business and they need to start saving costs. And this will actually send a negative sentiment to the company's stock price, because the less future profits is expected as the company's sales fall, the profits also fall. So that's just the impact to the companies, right? But if you think that's the end, you are absolutely wrong, because all these kind of economics will trickle down. We call it trickle down economics, and will impact the lives of individuals like you and me. Quick pause, if you haven't heard of Webull yet, it's the latest security brokerage in town, and it's offering really low commission fees. In fact, 0 commission fees, 0 platform fees that you can use to trade your US and Hong Kong stocks. Webull offers a very attractive feature, and that is trading fractional shares, which means your dollar cost average becomes more effective, because this time you don't have to fork out really large amount to buy your favorite stocks. So if you are interested in trading options, I think Webull is one of the best platforms because they offer 0 commission fees for trading options as well. Also, Webull has heard your feedback since my previous video talking about the FX spread. So they now offer a very competitive rate of 0.3% FX spread, which is level to the market. And finally, if you really want a good reason for you to use Webull, it's because if you use my referral link down below to sign up and deposit at least $2,000 in your Webull account and making 6 buy-in trades, then you can stand to get up to $100 worth of Apple shares from now till 30th June. With that, let's get back to the video. Let's say unfortunately you are one of the person in that company that is doing a massive layoff. Most likely you will also be worried that your rice bowl can be protected or not, right? Because one day you see the other department retrenching people, the next day you may worry that the person may be you. And what happens is consumers try to anticipate this kind of bad situations by actually cutting their spending, saving up more for rainy days, and also looking at cheaper alternatives. So I actually did ask a question on my community page and also my Telegram group, and I think more than 50% of you actually answered that you are either cutting back your spending or you are maintaining at the same level but you are starting to look for cheaper alternatives. A much less percentage of you are actually spending more despite the post-COVID activity surge, or you are just spending the same amount as usual. So I think that is quite negative, right? People are already holding back their spending despite the recession news not announced yet. Although Although there's a really small sample size, but do participate in the poll, right? I really want to hear what the community really thinks about this current market sentiment. And like I mentioned, it's trickle-down economics. When consumers actually spend less, they actually impact the companies further. Think about it, if you're not spending as much as before because you think that things are going to get more expensive, then the companies are going to suffer, right? They are going to get reduced sales. And let's bring it back to where the impact to company is. And it will be like a death spiral, you see, because companies reduce sales, then they need to lay off more people, then you scared of layoff, then you spend less. Then you spend less, the company need to cut their sales target again. So I hope that was easy enough for you to understand, because you don't really need a lot of economic sense. You just need some common sense to understand it. And also we start to see individual investors losing faith in their portfolios, especially if they started investing since last year, because this 2022 market crash eventually wiped out all the gains of 2021 and even some of the gains in 2020. If we look at the S&P 500 index, I think we are hovering around the levels of November 2020, where it was also a market correction period during the US presidential elections. So as an individual, when you're really scared, right, everyone is really holding on to their cash and trying to improve cash flows like the companies do. So they cut back on their spending, and nowhere is safe. If you invest in stocks, they are falling like no tomorrow. The bond prices are not great. Property prices are record high, such that if you enter at the current record high, you don't expect it to sell it at a profit later years. And if you had invested in crypto as an inflation hedge or to stocks, you will know that it crashed massively this year. What a bummer. Well, unless you are invested in gold as an inflation hedge to everything, but it's just sitting there like a lazy bum. Anyway, like I mentioned, the interest rate has already risen. The US actually announced a 0.75% rate hike. And what that means is that your housing loan interest rate is going to rise, right? It's not going to stay at the 1.5% that we seen last year. Really attractive bank loans of 1.5%, no more. Okay, I think now we are hovering around 2%, but with the interest rate going to hike further, I think we may actually see housing loans shoot up to 2.5%. And you know the reason why property prices were record high was because of the cheap housing loans with the low interest rates previously. Now that the trend has already reversed with the housing loan going to go up in the near term or future, then we may start to see a lower demand for property, because as people refinance their loans, they cannot get the cheap loans anymore, and that may mean that they will be unable to afford the same level of mortgage payments in the future. What that means is that people may consider selling away their investment property, especially when now people are afraid to lose their jobs and cannot finance the property anymore. Then they want to sell it away, right? Therefore increasing the property supply. So now you have a demand and supply trend. Your supply of property actually goes up because more people are selling out in fear that the property prices may crash. And then you have a reduced demand because people are afraid of purchasing property when their jobs are not so stable and they cannot afford the future mortgage payments with the high interest rate. But of course, that is just my assumption, right? Because I really cannot predict or time the market. There is actually a lot of inflow of wealthy people into Singapore because of our stable political system and also a very favorable tax rate. So who knows, right? Property prices may not fall as much as you think. Well, amid all the bad news, I actually do have some good news to deliver. And one of the biggest news is actually a relief rally last week. We did see like Nasdaq and S&P 500 having one of the highest week-on-week gains. The S&P 500 actually rallied more than 6% just on this past week alone. So I don't know if this is a bear market rally, relief rally, or are we really out of the woods, because a lot of people has been capitulating, like getting out of stocks, getting out of all their investments and holding on to 100% cash. Also, not all sectors are really suffering from a recession, right? I mean, if you look at air travel, it's at a record high. Every people is traveling left and right. Ticket prices are really sky high. KrisFlyer award seats are difficult to get on the wait list even, and they are devaluing. There are even more than 6,000 jobs available in the Changi Airport terminal because they need to meet the rising demand of travelers after the COVID pandemic. And the recent good news is that the Terminal 5 of Changi Airport is going to restart their constructions. I mean, it has been on hold since the COVID pandemic, but I'm glad now that everything has come back to normal and constructions have begun again so that we can push Singapore to become the next aviation hub of the future. But if you're feeling really negative about all these market sentiments and recession fears, then I want to assure you that the best days will come after the worst days, which is actually common sense, because if you zoom out, like they say, the market is always going up as companies continue to innovate and bring value to its shareholders with the rising population. So if you're really feeling that the bear market is going to last longer than it looks, then maybe you want to space out your buys for dollar cost average instead of averaging every 2 weeks. weeks, maybe you want to average it out every 1 month. Okay, just increase the duration. But there is also another camp, right? Just get out of DCA completely, wait for everything to stabilize. No right or wrong here, just depends on which approach you want to get. So if you are interested in what I talked about last week regarding the stocks market and crypto market crashing, then I refer you to watch this video right here, because I did share a brief history of why everything is crashing this year. With that, thank you for watching. My name is Christopher. This is Honey Money SG, steering young adults to financial independence.